Okay, we have started. So today we are continuing with candlesticks. I think about 39 or more candlesticks. However, we will not treat all the candlesticks. I will take more candlesticks today, explain them, then you now go and search for the other candlesticks. I believe you now understand how to read them and understand their behavior, understand their nature. This is bullish spinning top. Look at it here, as you can see. This is the bullish spinning top. The bullish spinning top looks like the doji candlestick, but it is not doji candlestick. It says bullish spinning top. This is a bullish spinning top. Bullish spinning top candlestick pattern indicates a potential trend reversal from downtrend to uptrend. You can see this is a downtrend. The bullish spinning top came in and then we now had an uptrend. Bullish spinning top experiences wild price movement on both its upper side and lower side, but at the same time the candle opens and closes near the same price. So you can see the bears came to push it down and the bulls came up. So wild price movement both on the lower side and the upper side. If this were to be a doji candlestick, this was going to be the wick or shadow will be actually be longer than this. So this is a bullish spinning top, and it indicates the presence of a trend reversal, as you can see here. So whenever you see this, you know that we are about to go bullish, and this is when it appears at a certain level. So this is a bullish spinning top. We are going to the next one. Bearish spinning top is the same thing, just that the bullish spinning top appears at the end of a downtrend. This one is appearing at the end of an uptrend, you can see. Yeah. Bearish spinning top candlestick pattern indicates a potential trend reversal from uptrend to downtrend. Bearish spinning top experiences wild price movement on both its upper and lower side, but at the same time the candle opens and closes almost at the same. So you can see it's the same thing, just that this one occurs at the end of an uptrend. Now this is bullish harami. Bullish harami. Now bullish harami candlestick pattern is a two candle pattern. You know, in candlestick patterns we have one candle pattern, we have two candle patterns, and we have three candle patterns. The ones we have been dealing before are usually one candle pattern. Now this is two candle pattern. That's two candles that form a particular pattern. Bullish harami candlestick pattern is a two candle pattern. Bullish harami pattern occurs when a small body, which is green candle, forms under a bigger body, which is red candle. This pattern usually occurs at the bottom of the chart and signals a potential bullish trend reversal. Let's say a trend is going down this way.
Yeah.
You know, going down is a bearish candle.
Yeah.
Then suddenly, probably at the end of that candle, you see a bearish candlestick. Then just by its side, you see a small bullish candle.
Yeah.
That will now indicate that setup is a bullish harami, and that is to tell you that the bears are about to stop or end, or they cannot push further. That the bulls are about to do what? Take over. So that's what it means. Please pause it. So you can see this is the buy bullish candlestick, and this is the bearish candlestick. We've explained it. Bullish harami. The next one.
So sorry, when that so that means when this bullish harami appears now, that means the markets will start going up.
Yes, when that it indicates that the reversal is about to occur, and the market is about to go into the bullish trend. That's what it indicates.
Okay.
Now the next one is tweezer bottom. Look at it. These are the tweezers. The tweezer bottom candlestick pattern is a bullish reversal pattern. Tweezer bottom pattern occurs when there are two or more candles with identical lows that mark a horizontal line of support. You can see both of them have the same lows.
Yeah.
A horizontal line of support, you can see both of them are on the same horizontal line. This candlestick pattern is generally formed on the bottom of a price chart. You can see it's generally formed. Let's say we have a bearish candle, a bearish movement, and then all of a sudden you have a bearish candlestick. Then you now have a bullish candlestick that immediately forms, and both of them have the same lows, and they are at that same low now having on the same support line.
Okay, they don't have up shadow.
And they don't have up shadow, but from here you can see both of them are having the same lows.
Yeah.
These lows now connecting, there's a line connecting the two of them. You can see this line now can now form a support candle. Once support rather, because we have support and we have resistance. These two lows can form a support level. Once you see this setup, you know that the chart or the trend is about to reverse and move into an uptrend. So that's it for the tweezer bottom. Bearish engulfing. We have treated bearish engulfing.
Yeah.
Then we have doji candlestick. You can see we've treated this. Doji candlestick usually very long.
Yeah.
Very long.
Long shadow.
Then this is gravestone doji. Now, look at this. It's the encircled figure here is a gravestone doji.
Yeah.
Gravestone doji candlestick pattern indicates a potential bearish trend reversal. Gravestone doji is generally formed at the top of the price chart. You can see generally formed at the top of an uptrend. Traders interpret this pattern as a sign to take a bearish trade in the underlying stock. So see, this is how it is. This is once you see this, you know that you're dealing with the gravestone doji candle. You know, normally doji candle goes like this.
Yeah.
But then the gravestone doji candle, this is how it shows. This is how it appears. Once you see this, you now know it signals that the trend is about to reverse to a downward trend. Now, this is dragonfly doji. Dragonfly doji candlestick pattern indicates a potential bullish trend reversal. Dragonfly doji is generally formed at the bottom of the price chart. You can see the difference. Gravestone doji is usually formed at the top,
yes.
but the dragonfly doji is usually formed at the bottom.
Yeah.
You can see the difference between gravestone and dragonfly is just inverse. This one, if you inverse it now, it will form a gravestone, but this one is T form, and that is what makes it a dragonfly doji. Traders interpret this pattern as a sign to take a bullish trade in the underlying stock. 3 outside up. Now, the ones that we have treated now, inside of it we treated the 2 candlestick setup. We have what is known as 3 candlestick setup, and this one now is one of the 3 candlestick setup, where we have 3 candlesticks that form a setup. Now, this is 3 outside up. The 3 outside up candle pattern is a bullish reversal pattern, which is formed at the bottom of the price chart. 3 outside up patterns are formed when the first candle is bearish, you can see, followed by a long bullish candle which covers the bearish candle, as you can see, from both sides, and lastly the third candle which breaks and closes above the second. So when you see a downtrend and at the bottom of the trend you see a bearish candle, then you see a large bullish candlestick, and then another one that closes up, you know that we are dealing with the 3 outside up, and that will indicate to you that we have entered a trend reversal phase, which means if you are in a downtrend you need to leave. If you want to enter the uptrend, it's time for you to enter.
Okay, can this appear in a, let's say, when the market is going up?
No, this is for a bearish movement. At the bottom, this appears at the bottom of a bearish movement. As you can see, the market was coming down. That's why we had this at the bottom of the trend. Immediately we have a bullish candle and then another one. That's the market is now going up.
Okay.
3, so meaning that it signals that we are about to enter a bullish trend and that you should be ready to enter. So 3 inside down. You can see this one is 3 outside up. This is 3 inside down. A bullish candlestick is formed. Suddenly we have a bearish candlestick, and another one that forms below it. So just like the opposite. The other one is for when it is going bearish. This one is for when it is going bullish. Now, 3 inside down candlestick pattern is a bearish reversal pattern which is formed at the top of the price chart. The same thing. 3 inside down patterns are formed when the first candle is bullish, followed by long bearish candles that covers the bullish candle from both sides, and lastly the third candle which breaks and closes below the second candle. So it's basically like the other one. So this long-legged doji. A long-legged doji pattern resembles the indecision between the market participants. A long-legged doji pattern can form at the top of the chart as well as at the bottom of the chart. So you can see long-legged doji. So whenever you see it at the top of the chart, you know it's about to change. When you see at the bottom, it's about to go up. So it's as simple as that. Hanging man. We did a hanging man yesterday. You can see this is a hanging man. So double candlestick patterns. Double candlestick patterns are the patterns that form by 2 candlesticks. I've told you already. Double candlestick pattern can be bullish as well as bearish. The location of these patterns on the price chart determine the direction of these patterns. So as you can see this one now, you can see this. This is I think doji. Then I have another one that comes in, and this particular one, you can see this. This setup now is a double candlestick pattern. But then let's go to below and then see what they are being offered. Bullish kicker. Bullish kicker pattern is a candlestick pattern where a bearish candle is immediately followed by a strong bullish candle. The bullish kicker pattern forms when the bullish candle gaps up, breaks and closes above the previous bearish candle. So you see there's a strong bearish candle here, but suddenly there is a gap before we had a bullish candle. So this is a bullish kicker. When you see something like this, know that we're about to go into the bullish trend. This is a piercing line. Piercing line candlestick pattern is a bullish reversal pattern. Piercing the pattern is formed when a strong bearish candle is followed by a bullish candle which has opened below the bearish candle, but it closes above the middle point of the previous candle. It's opened below the candle. Now we are in a downtrend. This is a bearish candle. Now but a bullish candle opened below it. You understand? As opened below, but it ended at above the middle of this bearish candle. The bearish candle, another candle opened below it, but it ended above the middle. So once you see this, you know this is a piercing line, and that indicates that the trend is about to do what? Go up. That one was a bullish kicker. This is a bearish kicker. The bearish kicker pattern is a candlestick where a bullish candle is quickly followed by a strong bearish candle. So it's going up, suddenly there is a gap and then a bearish candle. You know that you're dealing with a bearish kicker and the trend is about to go down. Dark cloud. Dark cloud is different from the piercing line. Now see, the dark cloud covers candlestick pattern is a bearish trend reversal. You see that one was a bullish reversal. You understand? Look at it now. Piercing line, bullish reversal. You understand? We are on a bearish movement or trend. Suddenly this one opened below and then closed above the middle of this bearish candle. So this indicates that we're about to enter into what? A bullish trend. Now, but look at this one. Dark cloud cover. Dark cloud cover candlestick pattern is a bearish trend reversal, which means we have already been in a bullish movement. Dark cloud cover pattern forms when a bullish candle is followed by a bearish candle, which has opened above the bullish candle high, but it ends up below the midpoint of the previous candle. You know, the piercing line appeared below the bearish candle and closed above its middle part. But now this one, we are in a bullish trend. But the bearish candle opened above but closed below the middle point of the bullish candle. So once you see this setup, you know that you are dealing with what? A dark cloud. And that means it's about to go down. Bearish. That's it. So this is bearish harami. Now, you know we have dealt with bullish harami at the bottom of the trend where it was bearish and then we now saw a small bullish candle. But in this case, it is bullish, and we have what? A small bearish candle.
Yeah.
That's to show us now that we are in a bearish harami. Tweezer top. What we dealt before was tweezer bottom.
Yeah.
Tweezer bottom shows sign of bullish reversal. But now, this is a bullish, tweezer top shows that we're about to, how will I put it, about to enter into a bullish trend, right? Now, but for tweezer top, it simply means that we're about now to, okay, let me read it so we can see the whole thing. The tweezer top candlestick pattern is a bearish reversal pattern. Tweezer top pattern occurs when there are two or more candles having identical highs that mark a horizontal line of resistance. You can see the former one was on the support level, but this one is on the resistance. This candlestick pattern is generally formed at the top of a price chart to show that we're about to do what now? Enter into what now?
Bearish
movement. So, Marubozu candle is a pattern that can be bullish as well as bearish. Marubozu candlestick pattern is formed where the candle opens at the low or high of the previous candle and closes at the opposite end without leaving any wicks. So
there's no shadow.
It can indicate whether it's going to be bullish, or it can also be used for a bearish movement.
And when it appears, that means the market is about to
change in the next direction. Triple candlestick pattern. So we are still on the triple candlestick pattern. This is morning star doji. A morning is used for bull. Evening is used for bear. Morning star doji indicates that we're about to go bullish. Evening star means we're about to go bearish. A morning star doji candlestick pattern is a bullish reversal pattern. Morning star doji is made up of three candles. The first candle is a strong bearish candle, you can see, which resumes the bearish trend. The second candle is a doji candlestick, you can see it, which represents indecision in the markets. I've explained indecision to you.
Yeah.
They are neither going bullish nor bearish. Indecision in the markets. That's this doji candlestick. The first one is bearish.
I noticed something on that candle.
Yes.
That shadow is green.
This candle, right?
Yeah. The shadow is green. Why this thing is red?
Red. So it's neither bearish nor bullish.
Okay.
Now, showing indecision of the market participant, and also shows that the selling pressure has slowed down because we're actually selling. The third candle is a strong bullish candle, which marks the trend change from bearish towards bullish. So once you see this, you know that we're dealing with a morning star doji, and that means if you are about to enter the bullish trend, this is the right time for you to enter. Bullish abandoned baby. We treated abandoned baby the other day.
Yeah.
Now, a bullish abandoned, that was yesterday. Bullish abandoned baby is a bullish reversal pattern. Bullish abandoned baby pattern is made up of three candles. The first candle is a strong bearish candle. Second one is a doji, which opens after a gap. You can see a bearish candle.
Yeah.
But there's a gap. That's why it is abandoned.
Yeah.
Then the third candle is a strong bullish candle, which gaps up. It is the bearish candle gaps from it. The bullish candle gaps from it. So both gaps makes it abandoned. So once you see a bearish candle, see this other candle, a doji candle, a gap before a bullish candle, you know that we are dealing with an abandoned baby setup, and that's to tell you that we're about to go bullish. Morning star, you can see that one was evening star. You understand? We'll have morning star and we'll have evening star. So okay, that was morning star doji. We'll soon see evening star doji, but this is just morning star. We have morning star doji. See it. This is morning star doji, but there's a strong bearish candle. Then there's a doji candlestick before a bullish candle. You understand? But here, this is just morning star, no doji.
Yeah.
You get? So a morning star candlestick pattern is a bullish reversal pattern. Morning star pattern is made up of three candles. Okay, I think it's the same thing, just that this doji seems to be different from the other one. The second candle is a doji which shows the indecision of the market participant and also shows that the sellers are getting weak. The third candle is a strong bullish candle which is a change in trend. So it's basically the same thing.
Yeah.
So evening star candle, this is what I've been talking about, I've been looking for it. Morning star was to indicate a bullish movement, and it happens at the end of what? A bearish trend. But the evening star doji occurs at the end of a what? Bullish trend. So you can see this is a bullish candle, a doji candlestick, and then a bearish candlestick, which means we're about to go what? Bearish. So evening star. Evening star, an evening star candle pattern is a bearish reversal pattern. Evening star pattern is made up of 3 candles. The first candle is a strong bullish candle. The second candle is a doji, which shows the indecision of the market and also shows that the buyers are getting weak. I think the difference in this type of doji and the normal evening star doji is that this doji here is not very clear in doji of a real doji candlestick. Like when we now see it, that's why I believe that's why they not put it as evening doji star. You understand? So, but the whole setup is almost, I'll say 99% the same. Now, number 28.
So when this evening star appears, that means you're about to
enter into a new trend. Once you see it,
and it's appeared in a green.
Yeah, the first one is a strong bullish candlestick. The second one is a doji candlestick, but it is still showing you the strong presence of the what now? Of the bullish candlestick, but it's doji.
Yeah.
You understand? Not full doji like that one.
Yeah.
That's why I believe that's why they not put doji here. But this one now shows the beginning of the bearish movement, which is a strong bear candlestick. Now, 3 white soldiers. 3 white soldiers forms after the end of a bearish movement. Now let's read it. The 3 white soldiers candlestick pattern is formed when the market makes 3 consecutive bullish candles with higher closes. The 3 white soldiers is formed at the bottom of the price chart after a bearish rally. At the end of the bearish movement, you see one candlestick, small candlestick, another one. These are 3 white soldiers. That should tell you that it is moving up. So 3 white soldiers. The opposite of 3 white soldiers is 3 black crows. White soldiers is indicating it's going
bullish.
up. But crows, 3 black crows bearish. It's not like, or just like opposites. The 3 black crows candlestick patterns form when the market makes 3 consecutive bearish candles with lower lows like that. So it's the opposite of it. Shooting star. Shooting star candlestick pattern is a single candlestick bearish reversal pattern. Shooting star is formed with a single candle which has a long wick at the top of a small or no body. The shooting star pattern is confirmed after a strong bearish candle follows the shooting star candle. So now let's say we have a bearish movement. A bearish movement, and the bearish movement at the bottom of the bearish movement, we now have something like this. It either appears like this or this way. But whenever you see it like this thing that looks like an upside down hammer, just know that this is a shooting star. Whether it shows a bullish presence at the bottom like this or bearish presence, just know that we're about to enter a bullish movement trend rather.
Okay, so when it appears in a bullish form, please can you scroll up?
Yeah, whether it appears bullish or bearish, we are going up. Yes.
Okay.
So you can see we had a bullish abandoned baby. This one is a bearish abandoned baby.
Okay.
There is a bullish candlestick, a gap. Then you can see this doji candlestick, and then a bearish movement, and that's a candlestick. That means we are going bearish. Rising 3. Rising 3. The rising 3 candlestick is a bullish continuation pattern. The rising 3 patterns consist of 3 candlesticks and it forms during an uptrend. The only condition of the pattern is that the 3 small bearish candles must be contained within the range of the first strong bullish candle. So we are at the end of a downtrend. Suddenly we have a bullish candlestick, and then in between there we have 3 bulls, but they are too small. After then another strong bullish candle comes up. The presence of this doesn't matter. It is these 2 But while they are called rising threes, because this three is usually in between these two strong bullish candlesticks. These two strong bullish candlesticks indicates that irrespective of the presence of this, we are still going what?
Oh,
Up.
okay.
Falling three is just like the difference between that one is for bull, this one is for bear.
So when it appears, it means you're
Yes,
still going down.
you are going down. Can see.
Okay.
So 3 outside down. 3 outside down candle is a bearish reversal pattern. It means the 3 outside down consists of 3 candles. The first candle is bullish. The second is a strong bearish candle which totally engulfs the previous one. The third candle closes below the second. So normally these are a bearish engulfing candle. It has engulfed the bullish. But immediately we form another one that comes here. That gives us 3 outside candle. So we have 3 outside, we have 3 inside.
So that 3 outside means we are going down.
We are going down. Right. Now 3 inside up. There is a bearish engulfing candle. The 3 inside up candle pattern is a bullish reversal pattern. The 3 inside up pattern, there is a bullish candlestick. Suddenly we have a bullish, it's a bearish candlestick. Suddenly we have a bullish candlestick, and then we have another one. So this is 3 inside up. That's like opposite of the one up there. So this is 3 star. Is a potential trend reversal. The 3 star pattern can be bearish as well as bullish. If this pattern is formed on the bottom of the chart, it becomes bullish pattern and vice versa. So if you see something like this tri-star, let's say bearish candles, you now see tri-star 1, 2, 3. We're about to go up. You understand? If it forms at the top of the trend, we're about to go down. That's what it means. So 37 single candlestick patterns. Marubuzu, doji, shooting star, spinning top. This is a spinning top. This is a dragonfly. So they just show this. So hammer, we have treated hammer.
Yeah.
Inverted hammer. This is an inverted hammer. Inverted hammer is a single candle pattern generally formed after a downtrend. You understand? It also looks. The inverted hammer looks like the upside down version of the hammer candlestick. So it's inverted hammer. Usually formed at the end of a downtrend. That's to indicate that we're about to do what? Go up. So that is it for candlestick today.